crucial lessons about personal finance can be mastered with time. It's a constant learning process, and there are several aspects to it. If you are new into it, this video can help you understand its broader aspects, including budgeting to savings to investments. Before starting, don't forget to like and subscribe MJ Business Channel for more future updates. So let's start. What is personal finance? The phrase personal finance refers to managing your finances as well as saving and investing. It includes financial planning for retirement, taxes, and estates, as well as banking, insurance, mortgages, and investments. The phrase is frequently used to describe the entire sector that offers financial services to people and households and provides them with financial and investment advice. How you approach the aforementioned matters is also influenced by your personal objectives and wants, as well as your plan to meet those needs within your means. Being financially smart is vital to making the most of your income and savings because it will enable you to differentiate between good and bad advice and make wise financial decisions. The importance of personal finance. Having a personal finance plan will help you achieve your financial objectives. These objectives could be anything, such as having enough money to cover immediate expenses, making retirement plans, or putting money down for your child's college tuition. Your personal protection insurance, estate planning, spending, saving, and investment habits all play a role. Americans have racked up a lot of debt because they don't know how to manage their money or practice financial discipline. Household debt had climbed by $2 trillion since December 2019 as of August 2022. To fund purchases, Americans are taking on an ever-increasing amount of debt, making personal financial management more important than ever, particularly at a time when inflation is eroding purchasing power and prices are growing. Areas of personal finance. The 5 areas of personal finance are income, saving, spending, investing, and protection. Income. The foundation of personal finance is income. The total amount of money you bring in that you can use for expenses, savings, investments, and protection. All of the money you earn is your income. This covers pay, benefits, dividends, and other forms of intake of funds. Spending. Spending is a form of money outflow and often accounts for a large portion of income. Spending is anything a person uses their income to purchase. Rent, mortgage, groceries, pastimes, eating out, home furnishings, house repairs, travel, and entertainment all fall under this category. Saving. The money that remains after spending goes into savings. Savings should be a goal for everyone to help with significant bills or emergencies. This calls for saving some money, which can be challenging. No matter how tough it may be, everyone should endeavor to have at least some savings, between 3 and 12 months' worth of expenses, to cover any changes in income and spending. Investing. Buying assets, typically stocks and bonds, is what investing entails in order to generate a return on the capital invested. The goal of investing is to boost a person's wealth above and beyond their initial investment. Since not all assets increase in value and can experience a loss, investing does carry some risk. Protection. The term protection refers to the measures people take to safeguard their assets from unforeseen occurrences like diseases or accidents. Planning for your estate and retirement as well as your life and health are all forms of protection. Personal finance strategies. It's best to begin financial planning as soon as possible, but it's never too late to set financial objectives to provide for the freedom and security of your family. Here are the best practices and tips for personal finance. Number 1. Know your income. If you don't know how much money you have left over after taxes and other deductions, it's all for nothing. Therefore, be sure to know your exact take-home pay before making any decisions. Number 2. Devise a budget. To live within your means and save enough money to achieve your long-term goals, you must have a budget. The budgeting strategy of 50-30-20 provides a fantastic structure. It is broken down as follows. After taxes, 50% of your take-home pay or net income is spent on living expenses like rent, utilities, groceries, and transportation. Discretionary expenses, like eating out and shopping for clothes, are allotted 30% of the budget. Charity donations are also acceptable here. 20% is allocated to the future, including debt repayment, retirement savings, and other savings goals. Number 3. Pay yourself first. Paying yourself first will help you save money for unforeseen costs like medical bills, a major auto repair, living expenses in the event of a layoff, and more. 3 to 12 months of living expenditures constitute the optimal safety net. Number 4. Limit and reduce debt. It sounds easy enough. To prevent debt from spinning out of control, don't spend more than you make. However, most people do need to borrow occasionally, and there are situations when it might be good to be in debt, such as when buying an asset. One such instance would be taking out a mortgage to purchase a home. However, renting, leasing, or even having a subscription to software on a computer might occasionally be more cost-effective than outright purchasing. Number 5. Only borrow what you can repay. Although credit cards can be huge financial traps, it is unrealistic to live without them in the modern world. They can be used for purposes other than just purchasing items. They are essential to building your credit score and a wonderful tool to keep track of expenditure, both of which may be quite helpful for budgeting. Correct credit management calls for paying off your complete bill each month or maintaining a low credit usage ratio. Number 6. Monitor your credit score. Your credit score is mostly developed and maintained via credit cards, thus keeping track of your credit usage is as important to doing so. A good credit report is necessary if you ever want to lease something, buy a house, or get any other kind of financing. There are several other credit ratings available, but the FICO score is the most used one. Number 7. Plan for your future. Make careful to create a will in, if possible, one or more trusts in order to safeguard the assets in your estate and guarantee that your final intentions are carried out. You should also research your options for auto, home, life, disability, and long-term care insurance and try to find ways to lower your premiums, if at all possible. Make sure your insurance continues to fit your family's needs as it passes key junctures in life by periodically reviewing it. Number 8. Buy insurance. It's only normal as you get older to amass many of the same things your parents did: a family, a house or apartment, possessions, and health problems. If you wait too long to purchase insurance, the cost may be high. As you age, the expense of healthcare, long-term care insurance, and life insurance all rises. You never know what life will throw your way, too. A lot depends on your capacity to work, whether you're the family's loan provider or you and your partner both work to make ends meet. Number 9. Maximize tax breaks. Many people squander hundreds or even thousands of dollars each year as a result of an unnecessarily complicated tax structure. By maximizing your tax savings, you'll have more money available for debt repayment, enjoying the now, and making plans for the future. Number 10. Give yourself a break. Planning and budgeting can appear to be fraught with limitations. Make sure to treat yourself occasionally. You need to take pleasure in the results of your labor, whether it's a trip, a purchase, or a rare night out. You get a taste of the financial independence you've been striving for by doing this. Not least, remember to delegate when necessary. You could be capable of managing a portfolio of individual stocks or your own taxes, but it doesn't mean you should. A simple method to kickstart your preparation is to open an account at a brokerage and spend a few $100s on a certified public accountant or financial planner. This is it for today's video. What do you think of our video? Feel free to share your thoughts in the comment section below. Don't forget to like and subscribe to our channel for more future updates. Thanks for watching.